Hello, I am John Najarian, and Rebelcon 2022 is almost here. We do have a virtual pass. The virtual pass gives you full access to everything, all the streams, the live trading sessions, all of our fabulous keynote speakers. So to learn more about what's going on at Rebelcon 2022, whether you're in person or virtual, check out marketrebellion.com/Dallas. Bang.
There it is.
Welcome back, folks. I am in an undisclosed location.
There is a bed behind him, I might add.
What?
We're not going to ask anything about that at all.
And Pete is, of course, somewhere also undisclosed, and we welcome all of you to the Rebel Edge. We've got our producer, Jared, ready to snap through a bunch of graphics and so forth. And we're going to dive right in with 1 minute macro. And for those who wonder why 1 minute, because that's all it's worth. If any of you can tell me how you can make money from talking about macro other than getting paid by a network to talk about it, please send those our way because we'd love to hear about it. Pete, what's your macro that's moving the markets today? Is it the worries about inflation and how hard the Fed's going to go?
You know what, John? I will make it really short and sweet. It's the 10-year, the fact that the 10 years at 3.25. We talked about that, the 10-year for the last couple of months. And when it gets above 3, it's time to start getting a little bit more antsy about maybe selling a little bit, because that's exactly what we're seeing playing out. And it seems like even on the days, John, when we start off strong, we cannot hold it. And I think a lot of it has to do with where the 10-year is trading right now at 3.25, and the 2-year at dang near 3.5. Holy smokes.
Yeah, well, that's right, Pete. It's 25 to 30 basis points above the other. That's inversion. So if you needed to know, are we in a recession or not? Yeah, we're in a recession. And whenever they invert like this and stay inverted for this long, it's another sign we're in a recession. All right, let's get started, Pete, with Nvidia, because hit a new 52-week low. I know a lot of people are bragging about, I guess, about where they bought it. But if you didn't sell it, you only did half the trade. I'm not saying you don't bet on this stock, Pete. I'm just saying that now that the U.S. has imposed some new license requirements, and it's going to, according to Nvidia, hit them for at least 400 million in potential sales to China alone. That's a big deal.
That is a big deal, John. And here's the weird part, though. 400 million from China. You're going to take some from other countries that are going to be listed, obviously the Russians and everything else. Here's the funny part about it, though. The stock is down multi-billions today. I mean, if you look at the market cap of where the stock was and where it is now, which is, hovering around the year-to-date lows at 133. John, we were at $300 to start the year, and here we are now. It's 160 in May. It's 133 now. Gives you a little bit of an idea of the punishment that not just Nvidia, but the semiconductors, but specifically Nvidia has been absolutely hammered. There's no doubt about it. Is it oversold? Probably. Does that mean it's time to buy? Maybe not just yet, but I do own it, John, and I've been taking advantage of the implied volatilities that are skyrocketing and giving me all the premium that I want to be able to sell against the long stock.
Pete made a great point there too, folks, about the fact that, 400 million in potential sales to China, and yet the stock is down over $33 billion in market cap today alone, because 10% move, $330 billion stock. We can do that math. I don't know if the administration can, but we can do that math, Pete. How about 3M? I wanted to hit this one, Pete, because, when people supply the military with stuff, that's a really vital thing. And it's not just the usual contractors like Northrop and Raytheon and things like that, General Dynamics. It's also somebody like 3M. They made a bunch of earplugs that apparently were defective. They've got 233,000 lawsuits from soldiers, men and women losing their hearing.
Mhm.
And then they say, on top of that, we've got global growth that really scares the crap out of us
Mhm.
going forward, which also is something that you and I talk about all the time.
Yeah, headquartered right around the corner from me here, John. I'm in Stillwater and it's not too terribly far away. It is amazing. I mean, and they're also talking about the challenging environment that's around us right now on top of this. And you take a look at where that stock is, where it came from, it's getting absolutely hammered. The fundamental side of it is not being looked at, I don't think, at all, but for probably the right reasons, John. It's not only that lawsuit, but 3M has had a lot of different lawsuits over the last few years. One of them was the cancer linked water. I mean, it just seems like
For
there's one
dumping
thing.
stuff in lakes.
Yeah, one thing after another. I mean, they seem to be stumbling, and you could blame every one of the last three CEOs for some of the issues that have gone on here. I don't think it's just one. I think all three of the most recent CEOs have absolutely failed people when it comes to some of the things that they needed to do from the directive from the very top to make sure they were doing all the right things along the way, and they have not.
Yeah. Well, Pete, I'll tell you who else has not, and that is MongoDB. um, Now, this is a cloud computing platform.
Yeah.
And if you look at where they came from, Pete, because I did a little back test and
Yeah.
I was looking at them, 5 years ago, it was $20 stock. It was over 300 just last week. And now it's just getting throttled because they're still losing money. When
Yeah.
do these guys start making money, Pete? And then conversely, the one that is also losing money, but not losing money as fast, sort of like the pilot that says, I've got good news and bad news. Good news is we're making great time. The bad news is we're lost. Well, that's kind of what's going on. But cloud computing names are not printing money, but NTNX is up over 22% today, Pete.
Yeah, they're going in opposite directions, John. I think for the reasons that you just stated as well. I mean, when you take a look at these two companies, neither one of them are making money, but one of them's losing money a lot faster than the other and burning through that cash that they've got. And that's always an issue. And when you mentioned the fact that this Mongo, John, was at $300, how about if I told you the 52-week high is 600 or it's just right around 600? I mean, holy smokes, these guys are in for it. I mean, we talk about cloud computing all the time. I mean, that is one of the areas that we all like, but you got to make money. At some point, when you're a publicly traded company over a period of years, at some point you got to make money. And I think that's the other side of this, of why we're seeing these markets move the way they are and some of these big, huge tech companies moving the way they are. It's because people really do demand that you've got to, at some point, prove it that what you've got is worthwhile enough that you can make money producing it. Otherwise, all you are is Peloton or Uber.
Yeah, no, that's correct. And people gave Amazon crap for a long time,
Yeah.
but the revenue was just astonishing. And these guys are making good sales, but it's not enough to keep them above water. Pete,
Yeah.
take a look at Turquoise Hill, TRQ. Now, we've had this one for unusual activity, not recently, but we have had it in the past. And this one is up huge today because apparently Rio Tinto is going to be buying them. They already owned a piece. They're going to buy what they don't already own and valuing it at about $3.3 billion, Pete. Big deal today in the mining space.
Yeah, and I think what's most important, John, is this just, I think, is a reflection of where we are going into the future in terms of when we talk about all these different pieces of the puzzle that go into the EV space, the solar energy and go into the wind, all of that, it requires copper. That's what they're doing here.
Yep.
There's a lot of different other parts that go into this as well. It's not just copper, it's lithium, it's all those things that we mine for. But people have to know those areas, if you are projecting out, and oftentimes they're looking 10 years into the future, those demands are going to double, John. And so because of that, I think these are great moves right now. Now is the time to pounce when you want to be the biggest and the baddest in the industry. They are not. You look at a Freeport Mac and some of these others, there's certainly a lot of different names that you could come out with right now. But when we're talking copper, we're talking about the EV space, we're talking about batteries and all of that that goes into that whole thing. The transmittance for the wind, all of that, ends up being parts of this, whether it's nickel or copper or whatever. I think that is a spot that everybody does need to focus on a little bit more and understand that that is the energy of the future for sure.
Yep, no doubt, Pete. And hats off to anybody who had Turquoise Hill. I
Yeah,
didn't have any, but
me neither.
that's a heck of a move today. All right, Pete, let's talk about unusual option activity. We'll preface it by saying what Pete and I are describing is in all likelihood stocks that we are trading as well. So when we see unusual activity, if it's calls, bullish, puts, bearish. Today, my trade, Pete, is EFA, and it is bearish.
Yeah.
EFA is basically the major markets around the world outside of the US and Canada. So virtually everything else, EFA has been sliding. It's down hard again today. And they came in and bought 61,000 of the October 60 puts. To give you guys an idea, every option's for 100 shares. So that's 6.1 million shares short potentially at that 60 strike, with the stock trading at about $60.55, something like that. So, Pete, that is a big downside bet. I don't think it's hedging. I think that's a big downside bet about Europe in particular suffering this winter.
Yeah, I think you're right, John. And I think just to add real quick to that, you talked about the spider put buying the other day as well, and the monster option paper that we were seeing there. We also had IWM paper there looking to the bearish side. So as we've been sliding, these guys have been right. And then sometimes they're rolling or sometimes they're putting on new positions. And it happens all the time. I got one that was bullish today. It was tough to find, John. I had to dig through for a long time to find very much bullish paper. But Delta, and Delta's pretty interesting. You look at what's going on with flights, and you look at American, you look at Delta, you look at United, all of these various companies. Obviously, Southwest you throw in there too, but the big three. Delta with a buyer of 10,000 of the September 32 calls today. That did grab my eye a little bit. Stock was trading closer to about 30 and a half and looking for a little bit of time, not a whole lot of time, but you've got 3 weeks, give or take, that you're able to watch to see if Delta can make any kind of a move to the upside. Maybe part of that could also be on the coattails, John, of what we're seeing with fuel in terms of the crude. When you look at what's going on with crude and we see that it's been going down, 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 down and slamming to the downside. I think last I looked, it was trading around 87. Maybe that's a little piece of that puzzle as well. We know demand is coming back, but if the fuel prices, jet fuel, comes down just a little bit, that's very, very meaningful for a lot of these different carriers. But I thought that one was pretty interesting. They did hedge it or they rolled down either way with the 35 calls. So these are the September 32 calls. They were going for about 60 cents. So not expensive, but looking for a little bit of upside for Delta.
Yeah. And look at that leverage you get, folks. Instead of 1,000 shares at $30, you're putting on an option trade for 60 cents, which means $60 because every option's for 100 shares. So if you buy a 10 lot of that, it's $600. You control the same sort of move in the stock as if you had 30,000 on the table. The trade-off is time and that strike price. All right, Pete, how about if you take us into a little sports? I know we've got college football returning to the TV tonight.
Boy, do we ever. Both of us played college football, NFL football. We're going to be hitting both today in a lot of different ways. But I think, John, what's so fun is Thursday night football, kicking it off. I used to wonder, why are they doing this? Saturdays is the way you do it. No, it's so big right now. And we talked about that Big Ten contract the other day being $8 billion into the future. It's just amazing what football does bring to the television sets out there. We've got 2 huge Big Ten games. Penn State's going to Purdue. Now, everybody would say, well, why is that a big game, Pete? Purdue's nobody. Penn State's great. Well, those of you who don't follow it close enough, I can tell you this. Purdue won 9 games last year. They had a couple big victories. As a matter of fact, they had one huge victory against Michigan State, who, by the way, was the number 3 team in the country and undefeated 8-0 when they beat them. But they got a great quarterback, John. He doesn't throw interceptions, throws a heck of a lot of touchdowns. This kid O'Connell, very, very good. And on top of that one, we've got Notre Dame going to the Horseshoe at Ohio State, number 5 against number 3. Notre Dame is a 17.5-point underdog in this game, in the Horseshoe. What do you think of that? Have you ever seen anything like that, John, with 2 top 5 teams going at it with that kind of a spread?
That last part is the key, Pete, because either Notre Dame does not deserve to be in the conversation at all for a top 10 team, even maybe even 15, to be a 17-point dog in
Mm.
that first game. I would say, Pete, you know, if I'm a betting man, which I am, I might have to put a little on Notre Dame, because either somebody bribed a bunch of the voters for the top 5, top 10, or Notre Dame's not as bad as that 17-point spread implies.
Well, they've had a lot of changes at Notre Dame, John. Marcus Freeman's now the coach. The other coaches went down to LSU. We're going to forget about him because he couldn't handle it in the Big Ten when he was at Notre Dame anyway. So why not shoot him out? Notre Dame will be in the Big Ten soon. They play everybody in the Big Ten. They may as well be in the Big Ten.
Right.
Going on to the NFL, John. Oh, by the way, Ohio State has 3 candidates for the Heisman Trophy, by the way. The quarterback, the running back, and the receiver. Not too bad. So they are pretty damn good.
Not bad. That's
when it
pretty
comes
good.
to the NFL, John, you played for the Chicago Bears. And
Chicago Bears.
that was really cool. I know you loved that experience. Both of us were lucky enough to play in the NFL for a while. Tell me about what's going on with the Bears, because they did something pretty interesting. They grabbed 6 different players that got waived, including one that was a very high first-round draft pick last year from the Raiders, who just gave up on him after 1 year. I mean, unbelievable, but that could be something great for the Bears. What do you think?
Yeah, well, typically, Pete, the Bears suck at drafting, and they also suck at picking up free agents. So obviously, they've got a new regime in there, and they're trying to make a stand. They're trying to say, hey, we can judge talent. That's why you brought us in. We're going to judge talent, and we're going to put the best players we can on the field. They've got a playmaker in Fields, the quarterback from the Ohio State.
Yep.
And he's a great kid, Pete. I think, you know, if you give him the right people around him, that kid could really be special. But again, the key is the right people around him. Bears always pay attention to defense. Very seldom do they pay attention to offense, even though they squandered some of the greatest talent on earth, like, for instance, Sweetness, Walter Payton. Yeah, he set NFL records, but I mean, come on. They didn't win. He won 1 Super Bowl, and he didn't even get to score the touchdown. They gave it to the fridge instead. So, yeah, I think it's nice to see the Bears, though, making these moves, Pete.
Yeah, Alex Leatherwood's the kid from Alabama. He was the 17th pick in the draft last year, and the Raiders gave up on him and waived him. So I think it was a great move to pick him up, John. I remember the kid in college. He was a heck of a player, and I think if you got the right coaching, you can actually take care of this kid, and he could be pretty good. The other one was the Minnesota Vikings that I thought was pretty interesting as well, John, because how about this? If I told you 2 years ago, the receiver that went right before Justin Jefferson, who the Vikings took in the first round pick, this kid was pick number 21, coming out of TCU, and Jalen Reagor. And they gave up on him. The Vikings were like, you know, we don't even need a receiver, but this kid, it was pretty daggone good. And we think we know what to do with him. I played with the Vikings, totally different ownership, totally different coaches, totally different everything. But I'll tell you what, if I'm Kirk Cousins right now, I'm looking over there thinking, wow, are we loaded with wide receivers? We got KJ Osborne. We've got, you know, Thielen. We've got JJ. And now we add this kid Reagor from TCU. Wow. Is that unbelievable, John, to be able to have 2 first-round draft picks that just came out 2 years ago, and now they're on the same team?
Yeah, that is some pretty special stuff, Pete. And, you know, you and I are big fans of Cousins. I hope he lights them up this year. He is loaded. Yeah. Well, folks, that's going to do it for today. We appreciate you joining us. Bang. Make sure you check out Pete's The Take every day at 10:30. I'll be back with 3 at 3 p.m. And we'll both be back tomorrow. See you then.